the user market really came back in a big way last year.
Mm-hmm.
It seems like a lot of the investment world is just back and looking to buy deals in this market.
It really is, and Q2 is going to be huge.
Q2 is going to be
lot
good.
Of deals,
and it's value add, it's core, it's across the board. And we have a couple deals out right now that are some value add opportunities, some core. We're getting a lot of calls, which is good.
That's right.
Yeah, and they're real calls. They're not just fishing for what's going on in the market. Welcome to our Industrial Advisors podcast. You have Bill Condon and Matt McGregor. We are doing our Q1 review of 2025. And so we want to start with our three dynamic factors and one opinion. So let's jump into the three dynamic factors.
Let's do it. First, capital markets are back, like really strong first quarter. We'll get into the numbers, but strongest first quarter in 3 years, right? So
really good first quarter.
Screaming back. And then as we know, we got some big deals that'll be closing in Q2. So that's just going to continue. Biggest deal of the year will close in Q2.
And a lot of kind of singles and doubles that are on the market as well.
That's right. Second one is we had positive absorption, slightly taking out the east side. So, Seattle down through Thurston County.
Yeah, which are the main, the markets people care about.
Yeah,
anyway.
exactly. We dropped from 8.1 to 7.9. So a little bit positive.
Mm-hmm.
And then related with that, though, I would say that it's going to continue to dip down because we just signed a deal in Frederickson for 317. Looks like the Prologis Auburn building's going to, if it hasn't signed, it's getting signed. That's 200. Got a couple other deals that are being signed around 100. So we're going to continue to see that dip.
Yeah.
Maybe, I could see that drop a couple more points, and then it's going to shoot back up. And it's starting in Q2 into the end of the year as all this product delivers.
Yeah, I mean, we're hovering around 8-ish% right now. Maybe come down a little bit, but I think it's going to be around 8 for the coming, few quarters.
Yeah, although I could see it shoot to 8.5 before it starts dropping again.
Yeah. But in that general area.
That's right. And then the one opinion that we have for the quarter is that South Seattle is continuing to tick up in vacancy. We've been talking about it for a long time. I think it's 10.4%.
Mm-hmm.
South Seattle has to react in market rates. I'm talking across the board, not on specific projects, to be able to stop this, right?
Yeah.
There's a combination of reasons. We've killed it on this, over-talked it, but they got to come down in rates.
Yeah, I mean, they really need to start competing. There's always been a big premium in South Seattle to be in South Seattle from a location standpoint compared to the Valley. And that premium has gone down and going to need to continue to kind of loosen up a little bit because the Kent Valley, you look at the North Kent Valley, it's really not that far from South Seattle. The product's more functional for the most part. And so, yeah, I agree that rates are coming down in South Seattle. They just have to, given where the vacancy rate's at. And we'll go into the South Seattle close in some of the submarkets, but it's going to have to come down and landlords are going to need to get more aggressive.
For sure. So let's jump into the market by market statistics. We had a tick up in South Seattle, so up to just under 10%.
Yep, it jumped about a half a point. So it was 9.4%. It's now at 9.8% from a vacancy standpoint in a 46 million square foot market in South Seattle.
That's right. And then Kent of the South Valley, Seattle down south, is the only one that went down from 8.1 to 7.6. So
yeah,
Kent's rocking.
Kent Valley.
And then, no, I apologize. We had Thurston. No, the other one that went down is Pierce County, slightly from 8.7 to 8.5. Thurston went up 4.6 to 4.9. So overall, we went from 8.2 to 8.1.
Yeah, so we're going down, which is
Slowly.
good. And just to touch on the east side and north end because we have the numbers jumped up from 4.1 to 5.1 on the east side from a vacancy standpoint, and then stayed relatively flat in the north end from 8.3% to 8.1. So overall, the east side north end stayed right at 7.9% quarter over quarter.
That's right. And then diving into the size ranges, 10 to 25 continues to be strong, although it went up to 4.4 from 3.9. The 25 to 50, no change. 50 to 100 went down. So a few deals there from 7% to 6.6. And then unfortunately, the 100 to 200 jumped up from 9.4 to 10.7.
Yeah.
And we've got a couple more buildings delivering in that. So that's just continues to get ugly.
Yeah.
Fix it, Bill.
Yeah, well, I'll fix this. The 200 plus went from 10.6% to 9.5%. So
why do you get the good news?
Because, I focus on the big deals and but no, so that is good to see that the bigger box market is starting to get some more traction. That's a really good thing because that generates so much activity for the market.
And I will say, I have noticed, I won't mention the names on this, but this last week, there's a few new deals in the market that are going to absorb some big space.
Activity level across the board is really good.
Yeah.
When you're 50 and above, I think that there's really good activity. And the other thing, when you look at that 50 to 100 range, that vacancies come down. I think that some of those buildings that have been sitting have looked at demising their spaces into more of the market that's healthy. Mm-hmm. And because of that, some of that stuff's getting absorbed. Whereas in the past, they weren't willing to demise it.
Yes.
And so we have personally done some of those deals and gotten aggressive and gotten deals done.
That's right. And on the big size range, if you would have asked me a few weeks ago, it was really quiet, right? Mm-hmm. There's 3 deals in the market that I think will take 2 million feet down.
Those are the ones that really move the needle, right?
Sure.
So when you look at, holistically at a market and you see the vacancy rate, it's not the 50s that really move it. It's the big ones that move the vacancy. But I think it tells a lot about the bread and butter of the market when you look at that kind of 50 to 150, 200,000 square foot range of just how active the market is overall.
Agreed. So large move-ins, move-out. Again, just so everybody's aware, we call a move-in upon lease signature. We're the only firm that does that. So we're reflecting move-ins not on when they're recorded by Colliers, but actual move-in this quarter, right? So the largest one was Floor and Decor, just over 1.1 million feet. The steel building picked up a subtenant on a move-in at 206, which would have been the second largest move-in. So the largest move-out, 205,000 feet, Samsung sublet.
Yep.
And then the second one at 170,000 feet, ACP Phase 1. What is that one?
That's in Kent.
That's
in Kent. So it's 170,000 feet. Then there's, there's a 160. And then at the Adams building, there was 150,000 square foot move out as well in Sumner.
Very good.
So those are your bigger ones.
So great news on the port. This is a crazy stat. Port overall up 19.3% over last year.
Yeah.
So that's a great sign.
Really good news.
Although that doesn't, as we've learned in the past, equate to leased square footage because a lot of it just gets railed out of here.
Yeah. Yeah. You'd still rather have good port activity than not.
Yes.
Yeah.
Exactly. So overall good news on the port.
Yeah.
Jumping to investment sales through Q1, just under 400 million. So huge increase there. And then I think more importantly, a big jump in square footage to 276. That's
per square foot.
Yeah.
On a building price.
That's right.
Yeah. So 275 a foot per square foot on average is a healthy number, which is great. And I think that when you look at the Q1's always the slowest quarter, right?
That's right.
And
so it's a huge quarter.
The volume trends upwards as you go throughout the year. And Q4 is obviously always the biggest one, but it's really a good start to the year on the capital market side. And we talked a little bit about this earlier. There's a fair amount of good product that's on the market now that'll close Q2. So I like the momentum that we're seeing on the investment side across the board, from institutional groups, which we knew would increase. Or the user market really came back in a big way last year. Mm-hmm. It seems like a lot of the investment world is just back and looking to buy deals in this market.
It really is, and Q2 is going to be huge.
Q2 is going to be good.
Of deals.
And it's value add, it's core, it's across the board. And we have a couple deals out right now that are some value add opportunities, some core. We're getting a lot of calls, which is good.
That's right.
Yeah, and they're real calls. They're not just fishing for what's going on in the market. They're taking a deep dive into the asset like they really want to buy it. And so I think volume-wise, we're going to see more and more offers as we continue to go throughout the year. And I don't know if we'll get back to where we were during like the pandemic volume, but
we're on pace for it.
The activity is really good, and I feel great about what the investors are saying and their demand to be here.
That's right. And the largest deal of the year so far will happen in Q2 in Frederickson.
Yeah.
Prologis back in the market after 12, 13 years of not buying core here.
Yeah.
This is their first major acquisition. So welcome back, Prologis.
Yeah, it's great to see. I mean, they got so big, it was hard for them probably to move the needle with buying a 300 or 400 or 500,000 square foot building. And so it's great to see them back buying a big building in this market.
Well, over that time period, they've been, a huge developer of new products,
great.
so they've done well there.
Yes, they've done really well. Yeah.
Excellent. Well, overall, I think no big surprises. I think we predicted that it would hit an equilibrium about now in overall absorption and vacancy.
Yeah.
And then before the market takes off again. So I think we're there. As we said earlier, it'll tick down before it ticks back up. But if we knock out these, 3 tenants in the market, a couple more appear, maybe it won't head back up.
Yeah, I'm really optimistic about where we are in the market from a tenant demand, tenant velocity standpoint. Landlords are still in deal making mode. So deals are going to happen, right?
For sure.
And then on the investment side, we already talked about it. Great demand, good product out there. That volume's up. So things are happening. And I think it's going to be a really, really good second quarter. And we had a good first quarter. So let's just keep that momentum going.
That's right. All right. Thank you very much.